Inflation is slowing. So why does your grocery bill still feel like it's climbing? Economists have a name for this frustrating mystery: the rockets and feathers effect. Prices shoot upward like a rocket when costs surge, but drift downward as slowly as a feather once those pressures fade. Americans experienced the sharpest grocery inflation in roughly 50 years, with food-at-home prices jumping 11.4% in 2022. Yet even as overall inflation cooled, many supermarket shelves never reflected meaningful relief. Instead, shoppers found themselves paying more while hearing headlines that inflation was easing. The difference is simple but powerful. Lower inflation means prices are rising more slowly, not falling. True price declines require deflation, something advanced economies rarely experience. Meanwhile, supply chain disruptions, the war in Ukraine, bird flu, energy shocks, and geopolitical tensions all pushed food costs higher. But their reversal has been painfully slow. So who should absorb those higher costs once the crisis passes? Retailers, manufacturers, or consumers? That question sits at the heart of today's economic debate, and the answer reveals why millions of families still feel squeezed despite improving inflation data. The story becomes even more interesting when consumer behavior enters the equation. Retailers often hesitate to slash prices on inventory purchased at elevated wholesale costs, while companies also try to preserve profit margins built during inflationary periods. At the same time, shoppers who become accustomed to higher prices gradually stop comparing every store, reducing competitive pressure for deeper discounts. That is why discount chains like Walmart, Costco, and Aldi have continued gaining market share, while private label products reached record sales as households searched for cheaper alternatives. Climate-related disruptions have also kept pressure on products like coffee, while tariffs and regional supply issues have affected items such as fresh tomatoes. Would you permanently switch to store brands if they saved you 30% or 40%, even after inflation finally settles? That decision is quietly reshaping the grocery industry and forcing major retailers to rethink pricing strategies faster than many expected. Now comes the twist that could determine what happens next. Some of America's biggest retailers have already started selectively cutting prices on everyday products, betting that winning back customer trust today will generate loyalty tomorrow. Analysts believe those moves could pressure competitors into following, creating broader price competition across the market. But don't expect a return to pre-pandemic grocery prices. Years of cumulative inflation, higher labor expenses, climate-related supply risks, and shifting global trade patterns have permanently reset many costs. Economists warn that the real victory is not cheaper groceries, but preventing another inflation surge while encouraging stronger competition. The rockets may have stopped launching, but the feathers are still floating down, reminding us that inflation's scars last far longer than its headlines. Do you believe aggressive retail competition can finally push grocery prices meaningfully lower, or have consumers entered a new era of permanently higher food costs? The next few quarters may provide the answer. Follow for more daily updates.